Hello, friends, and welcome. Today, we are going to talk about 5 key factors to consider when evaluating any investment opportunity. Before we jump into the video, make sure you like the video and subscribe to our channel for more educational videos. Now, let's get started. Evaluating investment opportunities requires a strategic approach. Here are 5 key factors to consider to ensure informed decision making. 1. Return on investment, ROI. Calculate the potential ROI to assess the profitability of the investment. A higher ROI indicates a more attractive opportunity, reflecting the return relative to the initial investment. 2. Risk assessment. Evaluate the risks associated with the investment, including market volatility, industry trends, and economic conditions. Understanding these risks helps in determining whether the potential rewards justify them. 3. Time horizon. Consider the investment's time frame. Short-term investments may offer quick returns, while long-term investments might provide compounding benefits. Align your investment choice with your financial goals and timelines. 4. Market conditions. Analyze current market conditions to gauge demand and competition. A favorable market can enhance the likelihood of achieving projected returns, while adverse conditions may hinder growth. 5. Management team. Assess the credibility and experience of the management team behind the investment. A skilled team with a proven track record increases confidence in the investment's potential success. Conclusion: by considering these factors, you can make well-informed investment decisions that align with your financial goals. I hope that you like the video and do follow our channel for more professional and business tips and other interesting videos. Thank you and goodbye.